Hi, welcome to Beth's Happy Home. I'm Jeff Stevenson, and Beth has asked me to talk a little bit about budgeting. My background is in accounting, and before I retired, I spent quite a number of years at the company that I worked for managing a budget for a regional office that included lots of different departments, and basically what I'm going to talk about today is going to be very similar to the process that was used and is used by most corporations and companies to manage their budgets and their expenses. Only in this case, it's going to be how do we manage our own budget with our own personal household. So it's the same principle, and it's a very valuable tool if you want to get control of your finances. So we're gonna walk through a budget here, and just going to be a hypothetical budget. I'm going to plug in some numbers, and you'll kind of see how it works. And again, this is very similar to what most companies do also. So we're going to just say that our income is going to be $5,000 a month. It really doesn't matter if it's 5,000, 1,000, 10,000, whatever it is. It's going to be the same principle, but for the purposes of this, we'll say it's $5,000 a month. Now, one of the things that you want to do, and it takes a little bit of time to figure this out, but it's a good idea to try and adjust our income taxes so that they come out kind of even. So in other words, lots of people get really excited when it's tax time and they do their taxes and they get this great big huge tax return. But what that means is that throughout the year they've been getting less money. The government's had access to the federal government has had access to all of their money throughout the year, and they haven't. And so then the government gives it to them all in one big lump sum. But it's better if you can actually have your money each month rather than having the government own it for you for that period of time. So try to figure out what your tax level should be, so that you, rather than getting a great big return at tax time, you don't get anything, but you're also not paying anything. You do not want to have a great big tax bill that you have to pay. So you can get with your employer, and they'll give you the W-4 form. You'll claim less withholding exemptions, basically.
So in other words, you will have more deductions on your W-4 to reduce your withholdings.
Correct.
Okay.
Okay. So now let's talk about how do we do the budget. We know what our income is, and to do the budget, you have to know what your income is. So that's the starting point. The next part is, and you'll notice that this chart is broken down into two basic type of expenses. We've got fixed expenses. These are the expenses that you have no control over, basically. They're fixed each month, they're the same. It's not anything that you can change. You can't reduce your expenses in the fixed category, really. You have things like your lodging, which is going to be your rent payment or mortgage payment, car payments, your health insurance, tithes and offerings, car insurance, that type of thing. Then the other part is going to be your variable cost, your variable expenses. Now this is where, once you get this all done, you can use this tool to kind of control what you're spending, because the variable costs are exactly what they say, they're variable. In other words, we'll talk about these as we go. But anyway, let's start with the fixed expenses and just make a little budget here. Okay. I have no idea what these are going to be, so these are going to be all arbitrary numbers I'm putting in here for the sake of this exercise. But let's just say that we're spending $1,000 a month on lodging, on either rent or a mortgage expense. Okay, car payment. Let's say we have $200 a month in car payment. Health insurance, let's say we're spending $300 a month. Okay, so now we've got income of $5,000 a month. We're already up to $1,500 here. Okay, so for tithing, we're just going to say $600, and the reason is something that I didn't explain before, but our income is the income that we actually have to use. So in other words, this is our income after taxes. Our income might actually be a little bit higher than that, but $5,000 after taxes is what we have available, and that's what you need to use when you do your budget, because you're comparing what you spend to what you actually have coming in. So we'll put that for tithes. Car insurance. The note down here says budget even if it's only paid every 6 months, which is a good idea, because even though you only pay your auto insurance every 6 months, you're trying to make a monthly budget here. So prorate that down to every month, and we'll just say $100. I'm trying to make nice round easy numbers here. So bottom line is, when it gets right down to it, we've got fixed expenses that we really don't have a whole lot of control over of $2,200, okay? And I'm gonna add those up just for kicks. Okay, $2,200 in fixed expenses on our monthly budget. Okay, now the variable costs. Okay, so now we've got our fixed costs, let's work on the variable costs. These are the ones that we have some control over, right? So we'll start with utilities. Now utilities, kind of a hard one if you're just starting from scratch here to know. So it might be a good idea to check back with last year's bills or the previous month's bills at least, so that you have some ideas as to what your monthly bill is going to be for various utilities bills. And utilities are going to include a lot of different things. You know, it's going to be garbage, water, gas, electricity, all kinds of things. So check back with your previous bills to find out an idea for what your utilities are going to be. The other thing when you're doing this budget is this: when you set up your original budget, you don't have to stick with that exact budget every month going forward. As you get more information, you might find out that you were a little bit off on your utilities. Some of the rates have gone up or whatever. You can adjust the budget, you know, for the previous or for the next month if you need to, once you have a little more information. But for now, we're just going to go ahead and say, okay, $400 for utilities. So for gas, we're just going to say $50. Well, we'll say $100. That's easier. I need to keep these nice and even so it's easier to add up. Food. Food's one that you have a lot of input on, right? I mean, there's a huge range of what you can spend on food. You know, if you're buying lots of expensive pre-prepared foods, it's going to be a lot more expensive than if you make things on your own little bits. Anyway, suffice it to say that there's you have a lot of play with the food. So we're going to say for food, we're going to say $500. I don't know, $500?
No, 50
So I'll say $100 for food.
for clothes.
I mean for clothing, $100 a month. So if you need to, you can shop at thrift stores to get it down to that level. Anyway, school fees. Okay, school fees might be if you have children, they're going to have expenses related to school. You know, maybe extracurricular activities, sports, extra books or supplies that they need. But you're going to have some schools fees. I'm just going to say $100 a month there. And again, I'm re-emphasizing this over and over, but these numbers your numbers are going to could be way different than what I'm putting. These are just purely for the sake of this exercise. Okay, recreation. Okay, so recreation or entertainment or whatever you want to call it, that's going to include all kinds of things. It might be going to a movie. It might be going out to a restaurant and you know, splurging. Any type of recreation. It could be some sort of travel. And based on where you are in life or where you are in your process of trying to get things under control, you know, that will vary a lot too. But for the sake of our thing here, I'm just going to say $200 a month for recreation. Okay. Now, the next one on here is savings, then debt retirement, and then miscellaneous. I'm going to skip down to miscellaneous first. Miscellaneous, there's always miscellaneous stuff, right? As you go through and you start tracking what you're actually spending, you're going to notice that there's all kinds of things that they're just kind of in between some category. You might lump it into one of these other categories that we have, or you can put it in miscellaneous. I personally just put our stuff into a miscellaneous category. It always comes up. So I'm just gonna say $100 for miscellaneous. It might even be something like you bought something extra for your house or your yard or something like that. I don't know. So right at this point, the only two left are for savings and for debt retirement. So total is $3,700. The first thing that you need to do is make sure that you have some sort of an emergency fund. All the experts will tell you that your emergency fund should equate to approximately 6 months of your monthly income or budget. And that just gives you a nest egg to fall back on if something happens. And you need, you know, you lose a job, there's some space in between when you get the next job or whatever. An emergency fund is, you know, roughly 6 months of what you have. So we'll go ahead and say for this case, our emergency fund or savings is going to be $500. Okay, and at some point, after the emergency fund, you'll also be trying to save for retirement, that type of thing, putting something aside so you don't have to live just on Social Security down the road. So finally, where that leaves us is debt retirement. We talked in the previous video about retiring credit card debt or other types of debt and getting out of debt, because that really makes you feel free, and then it opens up all kinds of other opportunities for you. So, okay. You'll notice that I got these in the wrong spot. I put
Miscellaneous.
The $800 is really your what you have left over at the end of everything else to retire your debt. And retiring your debt, then once that's retired, then you can take that money and you can apply it to any other category that you choose, really. But probably some of that at least should go into back into savings also. So the bottom line is, now we have income of $5,000 each month. We've set up a plan to track where our expenses are equaling that $5,000 also. Typically you want your expenses to be less than your income. That way you can get ahead. However, since we have baked into this the fact that we have some debt, we're going to include the difference there to pay off the debt, which is going to then equal our income. At some point, again, we want to get to the point where we have less expenses than we have income. So now we've created a budget. The next step then is to how do we use this budget? So the next step is that you have to each month keep track of what you're spending in these various categories. So when you get when you pay your mortgage or your rent, go ahead and record it on your spreadsheet or your paper, however you keep track of it. As you go out and buy groceries, record that, on your spreadsheet or wherever, so that you know how much you're spending. As you incur some school fees for your kids, go ahead and record that. At the end of the month, then what you do is you go back and you look, okay, here was my plan. How did I actually work according to my plan? And you'll be able to go back and tabulate what you actually spent. Again, like I said earlier, you may be over in some categories a little bit, and you may be under in others. Hopefully, you come in with no more than $5,000 in expenses. If you come in with more than this, then you got a problem, right? And then what you need to do is go back and look at your variable costs and determine, okay, where can I make some adjustments to bring myself back into line so that I'm spending less than I have coming in. And you figure it out. You figure out, okay, maybe I'm gonna buy some less expensive type foods and prepare from scratch more of my food, or whatever it happens to be. So one of the things you might do if you find out that you need to make some adjustments to your variable expenses and reduce those in order to bring yourself back in line is you might look at, okay, expenses for any one of these categories. You might withdraw that money at the beginning of the month in cash, stick it in an envelope, and write on the envelope, okay, here's my recreation money, for instance. Here's my entertainment money. And then you have that money in an envelope. That way, when you go and you go out to a restaurant or something and you spend it, and then when you get down to no more money left in that envelope, you're done, right? and you have a good idea of how much you have left to spend also. So if mid-month you've already spent the money that you have identified for recreation, you know that for the rest of that month, your recreation's over with. And you can kind of budget that as you go along, right? By keeping track of what you're actually spending, you know what you have left for the rest of the month, and it helps you to manage for the rest of the month your other expenditures. And again, at the end of the month, you go tabulate all this up and you see where you actually ended up. You may choose to adjust your budget for the months going forward, or you may choose to leave your budget the same based on what's happened. But the bottom line is, whatever you do, your budget has to be less to than or equal to your income, preferably less than if possible. And that just means that more can go into your savings for the future. So that's the basic plan. It's like I said in the beginning, this is the same kind of a plan that a business should use if they want to be successful. It's the same type of a plan that any family should use in order to be successful financially. And if you follow this, it's really simple. It's not rocket science at all. As you can see, I'm not a rocket scientist. But if you follow this kind of a plan and keep track of your expenses, compare them on a monthly basis to what you have coming in, you'll find that you'll be able to get control of your finances, and you'll be in a great place, and it'll make you feel very happy and in control of your situation. Very simple tool. So I encourage you to try this and see how it works for you. Thank you for watching.